Hello and welcome to Livewise Buy, Hold, Sell. I'm Grady Wulff, and today we're looking at three of the most exciting themes operating in the market right now. Plus, for something a little bit different, we asked our guests today to bring a stock that they're bullish on per theme. That's right, 6 hot buys right now. And to do this, I'm joined by Steve Johnson from Forager Funds Management and Luke Laretive from Seneca Financial Solutions. Gentlemen, thanks again for joining me today. And what an exciting time we are in the markets right now. There are some really key themes standing out. We'll start with artificial intelligence. There's no denying that is the dominating theme right now. Steve, I'll come to you first. What are you liking in this space?
I'll start with an overarching thing, and that is I go looking for the anti-themes more than the actual themes. And there's actually some great opportunities out there at the moment in this artificial intelligence space, or businesses that people think are going to get killed by AI. We own a company called Taskus in our international fund. It's a very, very good business, generating lots of cash flow. People think AI is going to kill it, and the share price has been hammered because of that. So there's lots of that. If you do want to do it, I'd be careful. There's a lot of hype at the moment around AI. I think Alphabet, I pitched it on Livewire a few years ago as a stock that I would hold for the rest of my life if I had to pick one. I think they have some incredible competitive advantages. They've got a huge amount of data about us all, and AI is driven by data. These algorithms that they're using were around in the 1980s. What's made the difference is the amount of data, and if you don't have that data, you can't win. And I think Alphabet's got more than anyone else across its various platforms, and I expect them to do very well out of it.
Now, there's no denying Alphabet has had a very good start to the year, up 30% this year alone. Now, Luke, what have you got for us? Can anything top Alphabet that we're seeing?
I don't know about topping Alphabet, but at 0.01% of the market cap, Global Data Center Group, GDC on the ASX, they own a 1% stake in AirTrunk, which I think, the most exciting part of this data center thematic around AI is really the hyperscale data centers, and, investing in an XDC here on the ASX just won't get you exposure to that hyperscale growth. And I think Global Data Center Group, whilst it's relatively unknown, tiny 230 odd mil market cap, actually does give you some meaningful exposure and leverage. I think that AirTrunk asset will IPO this year. Can't imagine the owners of that asset getting a better environment to go into an IPO. And certainly when that asset does transact, there's some meaningful incentives for the management team to return capital to shareholders. And from our perspective, GDC looks fantastic at the moment.
Global Data Center is up 55% this year to date, so it is on a bit of a run, but you're pretty optimistic about it. We'll look at the next theme now, and that is the healthcare sector, where we've seen some absolute flyers this year. The sector itself, though, only up 2% this year. Luke, I'll stay with you. What are you seeing in the healthcare sector? Where's the opportunity?
I really like Monash IVF. I think that's a fantastic business, still only trading on sort of 16 times earnings and a 4.5% dividend yield. From our perspective, it's got some fantastic tailwinds from a demographic perspective. It's a really well-run business, and there's been transactions at sort of 30 and 50% higher valuations in the sector. So for us, that's a natural takeover target, and in the interim, you're getting paid a nice dividend and some good growth upside as well. So I think that's a pretty good business for people to own. Monash
is up 3% year to date, but 16% over the last 12 months. Steve, over to you. What's your favourite in the healthcare cohort right now?
There's a surprising amount of pain out there, and we've actually been doing a lot of work on a lot of stocks at the big end and even at the smaller end. There's some smaller medical device companies out there that I think are really interesting. I still think ResMed's a good core holding for a lot of Australian investors. Yes, it had the massive plummet, it's back to where it was, but this is effectively an American company. They don't pay much out in the way of dividends. They buy back shares every year. The share price should go up. I think they can grow their earnings at more than 10% per annum for a long time yet, and trade at a similar multiple. So you should get that earnings growth as share price growth over time. And it's a great business listed here on the ASX.
Now, ResMed did bottom out at $21 in September last year, but it has rebounded to $32, where it's been sitting for a little while now, up about 25% year to date. So that's ResMed and Monash IVF for the healthcare sector. And the last theme we'll touch on is decarbonisation and the resources revival, a theme that hasn't really gone anywhere over the last few years. It's definitely undermining the market, and there's lots of hot commodities right now, and we're in a really interesting part of the commodity cycle. Steve, I'll stick with you with this one. Where's the opportunity in the decarbonisation space and resources revival?
Yeah, what's been working well for us that hasn't worked for about 10 years is the mining services space. So we've been long suffering shareholders there, and we've done quite well both globally and here in Australia. Macmahon's up a long way for us. But I still think the big diversified miners out there are really interesting, just long-term investments. And again, back to that ESG theme, there's not a lot of capital going in. It's hard to develop new mines. We own Glencore in our international fund. It's one of our really core holdings there. And I think this uranium theme has some reality to it. There's a bit of heat has come out of the market recently. The uranium price is down, a lot of the share prices is down. Again, I'd go big and safe. I think you can buy sensibly priced large producing companies like Canada's Cameco.
And the uranium price is sitting around $90 a pound right now, and it was just sub 50 a year ago.
Yeah,
so
it's still higher than it will be long term. I think at 75, 80, you get a lot of incremental production coming on, and if you're not going to make money at that price, you're probably not going to make money. So I don't expect the uranium price, you might get short-term spikes, but it's a long-term contracted market, and I wouldn't expect it to be dramatically higher than that.
Now, Luke, last but not least, what are you liking in the resources and decarbonisation thematic right now?
We're still bullish on the lithium sector despite the short-term negativity. I think the most interesting and exciting kind of decarbonisation story there is Vulcan Energy Resources. Code for that's VUL. That's a business that's building a geothermal powered, essentially lithium facility in Germany. Really interesting business and has been completely written off by a lot of fund managers around the market, I think, due to sort of the buzzy headlines around it. That being said, they're progressing their project nicely. They just raised $65 million from some pretty interesting investors, and certainly they've got a lot of news flow expected over the next few months. So from our perspective, that business looks really good. It's something that's probably $3, $4, $5 billion NPV that you can buy at a 800 mil market cap with $140 million cash in the bank. So I think there's value there and opportunity to take advantage of some of the catalysts that are coming up for this business.
Well, Luke likes it and investors like it as well, with a rally of 50% since March this year. That's Vulcan there. Now, that's all we have time for today. You heard it here from the experts about the themes they're liking and what the stocks are within each theme. If you did like this episode as much as we did filming it, why not like it and subscribe to our YouTube channel? We're adding a lot of great content every single week.